This morning, we've been talking about a survey from Deutsche Bank that found that half the respondents between 25 and 34 years old plan to spend at least 50% of their stimulus checks in the stock market. Many were recently encouraged by the GameStop investment situation, which, as you know, spread online. Most of them will be getting at least $1,400 checks. Some experts say that could put $170 billion into the market. Here to talk about that is our financial expert, Bruce Allen of Bruce G. Allen Investments. Bruce, good morning.
Good morning, Gary.
So first of all, are you surprised by the survey result?
A little bit. I think that it's a little bit unusual to see so much money flooding into the stock market from potentially a very younger group of investors. So it's both encouraging and a little bit surprising.
Yeah, the survey also showed while many adults plan to invest in stocks, some 37% in that poll said they want to use them for the equity markets. So for people that are not familiar, what is that?
Well, it's typically either buying stocks or owning a business. So typically in this case, people are talking about purchasing more stocks, and that's the equities in the stock market are typically the same.
So people under 34, if they do decide to invest in the stock market and say they've never done it before, what would you suggest?
I think there's two cardinal rules about investing in the stock market. Number one, you have to be diversified. So sometimes the activities of some people chasing a stock like GameStop, that may be entertaining, but that's more like going to Las Vegas than investing. And I think the second part of it is that being diversified means also diversifying across assets outside the United States potentially as well. And lastly is making certain that you give yourself time. If you're investing in the stock market for a house down payment or to pay off student debt or something along those lines, that's not a very good idea. Typically, people talk about putting money away in the stock market for 5 years and over. And those are typically in retirement type of accounts where you're letting that money work for you for a very long time. That's typically the rules of a successful investing are one, diversification, and two, giving it a long time. And if you do that, you're going to be successful.
So the stimulus check, this $1,400, assuming that some of these people that are investing don't need the money for other things, given that assumption, do you think it's a good idea for them to invest?
I think it's obviously different for each person, but I think if people have the time frame and the inclination to do that, I think it makes a lot of sense. But realize that it's, we're going to go through bumpy times and markets go up and down. And so having that time for people to recover from down markets, as well as putting that money away for a long period of time and diversifying those funds, those are the two key things, Gary.
Very interesting. All right, Bruce Allen, as always, we appreciate it. Thanks.
Good to see you.